Hey everyone, welcome back to Corporate Decoder. Today's filing is from MBOT Medical Incorporated, its latest quarterly report, and I am seeing some interesting shifts as they move towards commercialization. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company has finally started generating some revenue, but the path forward still has some significant hurdles to navigate. This is Microbot Medical Incorporated's quarterly report, essentially a check-in on their financial health and business progress over the last 3 months, ending the 31st of March 2026. Let's start by looking at their balance sheet. Think of this as a snapshot of what the company owns and owes at a specific point in time. As of the 31st of March 2026, the company had total assets of about $78 million. This is a bit less than the $81.5 million they had at the end of 2025. A big chunk of their assets, around $68.8 million. Is tied up in marketable securities at the end of March 2026. That is a noticeable drop from $74.7 million at the end of 2025. On the flip side, their cash and cash equivalents also decreased slightly from $3.9 million to $3.7 million. It is not a massive change, but it shows they are likely spending money. Liabilities are pretty low, around $4 million in total. This is good news. Now, let's look at how the company performed financially. This is where we see if they are making money or losing it. In the first quarter of 2026, Microbot Medical reported revenues of $105,000. This is the first time they've shown any significant revenue, which is a big step since they had zero revenue in the same period of 2025. This revenue comes from sales of their LIBERTY Endovascular Robotic System. However, with that revenue came costs. Their cost of revenue was $103,000, meaning they barely made any profit on the products they sold, resulting in a gross profit of just $2,000 research and development expenses, which are costs associated with creating new products or improving existing ones, were $1.3 million in the first 3 months of 2026. This is down from $1.5 million in the same period of 2025. They mentioned that this decrease is partly due to government grants helping to offset some of these costs and capitalizing manufacturing costs. Sales, general, and administrative expenses, which cover things like marketing, salaries for non-research staff, and legal fees, shot up significantly. They were $3 million in early 2026 compared to $1.6 million in early 2025. This increase is mainly due to more hiring and expanding commercial activities. Putting it all together, the company had a net loss of about $3.7 million in the first quarter of 2026. This is a bigger loss than the $2.6 million lost in the first quarter of 2025. So while they are starting to generate sales, they are still spending a lot to grow the business. This statement shows how the shareholders' stake in the company has changed. You can see the number of shares outstanding increased significantly. By the 31st of March 2026, they had over 67 million shares. This is a huge jump from around 19 million shares at the end of 2024. This increase is largely due to issuing more stock, which we'll see more about in the cash flow section. Their accumulated deficit, which is the total losses the company has had since it started, grew to over $107 million by March 2026. This is expected for a company in its growth phase. This statement tells us where the company's cash came from and where it went. In operating activities, they used about $5 million in the first quarter of 2026. This is up from about $2.9 million in the same period of 2025. This increase is mainly because they are spending more on inventory and other operational costs as they ramp up sales. Investing activities provided about $5 million in cash in early 2026. This is a big change from early 2025 when they used about $24.8 million in investing activities. The difference here comes from selling more marketable securities in 2026 compared to buying them in 2025. Essentially, they are cashing in some of their investments. Interestingly, financing activities provided no cash in the first 3 months of 2026, whereas they received a significant $27.8 million from financing in the same period of 2025. This suggests they haven't raised substantial new funds through stock sales or debt in early 2026. Overall, their cash equivalents and restricted cash decreased by about $56,000 in the first 3 months of 2026, ending with roughly $3.9 million. Let's dig into some of the notes to understand the details better. Firstly, the company's main business is developing robotic endoluminal surgery devices. Their key product is the LIBERTY Endovascular Robotic System, which is a fully disposable robot for minimally invasive procedures. They've been working to get this product approved and ready for market. and it seems like they've finally reached a point where they are selling it. A significant point here is the ongoing Middle East conflict, especially since their primary operations are in Israel. They detail how this conflict could affect their subcontractors, logistics like air travel and cargo, and potentially their international perception. While they state that so far there haven't been materially adverse effects, they are closely monitoring the situation. This is a crucial risk factor to keep in mind. Here we learn about significant financial obligations or potential future events. Microbot Israel has received grants from the Israeli Innovation Authority, totaling about $2.5 million. They have to pay royalties on future sales based on these grants. They also received a grant from the Ministry of Economy for marketing their LIBERTY system in the US market, also tied to future royalties. Trees also information about their ATM agreement, that is an at-the-market offering, allowing them to sell shares over time. They've been using this to raise capital. They also acquired assets from a company called Nitaloop, which involved royalty payments on future sales. This section is all about their stock and how it has changed. They've had several registered direct and private placement offerings. For example, in January 2025, they sold shares and issued preferred investment options to purchase more shares. These offerings are ways they raise money by selling stock or giving investors the right to buy stock later. We see a lot of issuances of warrants and preferred investment options here. These are essentially options to buy company stock at a certain price. They issued millions of these in various offerings, and many were exercised, bringing in cash but also increasing the number of shares. Most of these options are classified as equity instruments, meaning they are treated as part of the company's ownership structure. This table shows a massive number of outstanding warrants. As of the 31st of March 2026, there were over 16 million warrants outstanding. These represent potential future dilution, meaning if all these warrants are exercised, there will be many more shares of common stock, which can reduce the ownership percentage of current shareholders. The company has only one reportable segment, the development of robotic devices for endoluminal surgery. This means their entire focus is on this one area. The chief operating decision maker, their CEO, assesses performance based on the net loss for this segment. They have lease agreements for their US and Israel offices, as well as car leases. The future minimum lease obligations are outlined, totaling about $1 million over the next few years. This section covers things that happened after the 31st of March 2026, but before the report was filed, they continued their at-the-market offering in April 2026, selling more shares and raising about $17,000. They also granted more stock options to employees and the board of directors. This is the management's own perspective on the company's performance. They highlight the LIBERTY Endovascular Robotic System's FDA clearance in September 2025 and its limited market release. The full market release happened in April 2026, right after this reporting period. They also mentioned collaboration with Emory University to explore autonomous robotics. They describe the LIBERTY system as compact, disposable, and remotely controlled, aiming to reduce radiation exposure for physicians. They are targeting the peripheral interventional radiology market with future plans for cardiology and neuroradiology. ISO 13485 certification was obtained, which is important for European market approval, and they anticipate CE mark approval in the second half of 2026. Management also discusses the Middle East conflict, reiterating their assessment that it has not yet materially impacted operations, but acknowledging the ongoing risks and fluidity of the situation. As mentioned before, revenues for the first quarter of 2026 were $105,000 from LIBERTY System sales during its limited market release. This compares to zero revenue in the prior year. The decrease in R&D expenses is attributed to government grants and capitalizing manufacturing costs into inventory now that they've received FDA clearance. The significant increase here is driven by hiring more staff and expanding commercialization efforts, which is logical as they move towards a full market launch. As of the 31st of March 2026, Microbot had about $73.1 million in net working capital. They've raised a total of $168.3 million since their start. They believe they have enough funds to operate for more than a year. They raised significant capital in 2025 through various stock and option exercises, and continue to use their at-the-market facility for ongoing funding. The cash flow discussion reiterates the increased spending on operations, the shift from buying to selling marketable securities, and the lack of new financing activities in early 2026 compared to the significant capital raises in 2025. They primarily face interest rate risk with their cash investments, but it is not considered significant due to the short-term nature of their holdings. They also mention foreign exchange risk because a lot of their operations are in Israel, but they do not currently use financial instruments to hedge this. Management has concluded that their internal controls and procedures for financial reporting are effective. This section lists all the supporting documents for the filing, including various agreements and legal documents related to their stock and operations. Now, looking at Microbot Medical, they've finally started generating revenue after a long period of development and losses. The LIBERTY system getting FDA clearance and moving into market release is a huge step. However, the increase in sales, general, and administrative expenses is significant, showing they are investing heavily in commercialization. The fact that their gross profit is almost zero on the revenue they generated means they are not yet profitable on the product itself. The large number of outstanding warrants also poses a risk of future dilution for shareholders. The recent news about a short report and revenue misses in Q1 2026 are concerning. While the company states they are addressing misrepresentations, the market is clearly reacting negatively. The fact they had $72 million in cash and marketable securities at the end of March 2026 and believe they have enough for over a year is a positive sign for near-term operations. However, the continued net losses and the need for further capital raises mean they are still in a high-risk stage. One of the biggest risks they constantly highlight is the Middle East conflict, which could disrupt their Israeli operations. This is a geopolitical risk that is outside of their control, but could have a major impact. My biggest concern is whether they can achieve profitability on their LIBERTY system. Generating revenue is great, but making a profit from sales is key to long-term sustainability. The low gross profit in this initial revenue generation phase is definitely something to watch closely. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.